Hello friends, today we're taking a look at Walmart, ticker symbol WMT. Walmart is down almost 4% in the last month. However, it is up year to date almost 7%. They are down almost 10% since they reported on November 16, when they were almost to 170. Analysts believe that in the next 12 months they will be hitting $178 per share, which will be about a 70% upside from today's prices. So they think that it is a buy. The question is it? So that's what we're going to be exploring today. Welcome to my channel, Money Talks with Martin Reyes, where we try to take control of our personal finances and try to find great companies at great prices. If you are watching this in YouTube, please leave a comment down below. If you're listening to us on Spotify or Apple Podcasts, please leave a like, subscribe. Um, Leave me a message. Let me know what you think about my analysis. If there is stuff that I miss, things that maybe you would like me to, maybe you have a better bull case or a bear case. In today's episode, what we're going to do is we're going to be looking at who Walmart is. We're going to be looking at their latest earnings report. Then we'll jump into their finances for the last 10 years, see what they have been doing. Then after that, we're going to be jumping into a couple of valuations and see if what will be Walmart's fair price and a margin of safety. Walmart pays a nice dividend. Walmart is beloved by dividend investors. They just went ex dividend on December 7th. They paid $2.28, which is about almost 1.5% of a dividend. Walmart it's a mega store that they have super centers. The town that I live, we have a super center. They also have Walmart discount stores. They have Walmart neighborhood markets, which are a little bit more small, and they all have, I think they all have um, pharmacies and stuff like that. They're also very prominent on the e-commerce. We personally do a lot of the um, curbside pickup. We love that at our house. They also have I'm trying to get there. Internationally, they are in Africa, Canada, Central America, Chile, um, China, India, and Mexico. They're also trying to get involved in Brazil, Japan, and United Kingdom. They also own Sam's Club, which is it's like Costco, but not as good. And let me know if you would like me to do a video on Costco. Um, they just reported not too long ago, and I've been looking at them. The last earnings for Walmart was on November 16. After that, they really had a big drop, like I mentioned, almost 10% since then. It has been going down. They beat in earnings. They miss in actual gap. Uh, and they also beat almost by $1 billion on revenue. And I will be talking about why people started to sell. A couple of things that I noticed is that they're going to be having their next earning report on February 20 of next year. They are going to be the analysts are looking for better numbers in EPS and almost a 10 billion growth in revenue. They have, in the last 90 days, they have 8 up revisions and 20 down revisions. So part of what they reported, and I think this is a couple of reasons why people got nervous is because Walmart's comp sales, this means sales of stores, not new stores, but also as stores that have been open for at least for 20 months. So they're comparing their sales from established Walmarts. They have been going down, as you can see here. Each quarter they were somewhere around 8%, and it has gone down almost 5%. And they're talking about that part of the problem is general merchandise, so not groceries, not health, but it's all the other stuff that you find in Walmart. Sales are going down, which is a sign of the stress that the economy here in the United States is starting to hit the wallets of people. A couple of other things that I noticed in their report is right here. No, it's not right here. Is that Walmart in Mexico, their comparable sales have been going down. So that is an issue there. Canada remains stable. China, a lot of people have been watching at the Chinese economy, and at least when it comes to Walmart, it seems to remain stable. Sam's Club had a really big drop. They were having numbers somewhere around 10 to 12%, and now they're down almost all the way to 3%. So this is something that a lot of people are worried about. So let's jump into the last 10-year fundamentals. Uh, revenue per share has been growing somewhere around 5% in the last 10 years and about 6% in the last 5 years. Earnings has been a little cyclical, going up and down, but if you notice, it has remained somewhere around the 4 point something percent, $4.5. So in the last 10 years, it has remained, like I said, a little bit flat at 2%. Profit margins are pretty low in the last 5 years. Average is at 2.3%. And that is sometimes problems with these companies, is that any kind of increase of cost can really eat up the margins. When it comes to free cash flow, it has been also up and down, remaining somewhere around the $5 per share. In the last 10 years, it's been growing about at 3.7%. The margins of free cash flow average is 2.8%. Book value has been going up slightly, keeping up with inflation. Well, before the big inflation that happened last 2 years, 2.3% and 3.5% at five in the last 5 years. Return on invested equity average is at 17%, which is good. Return on asset average in the last 5 years is 5.6, which is great. And when it comes to the return of invested capital average in the last 5 years, it's at 10%. I normally look for 10%, 15%. Sorry, they're at 10%, so it's not great, but it's not bad. Dividend has been growing at 1.9% in the last 10 years. Payout ratio is pretty low at almost 38%, so that's pretty good. So if you're a dividend investor, as you can see, consistency and growth, not probably the growth that as dividend investors is looking at. There are probably other companies that are more reliable on growing and growing faster. When it comes to the long-term debt, they have healthy long-term debt margins. They will be able to pay all their long-term debt in less than 4 years with their average free cash flow. Shares, they have been purchasing shares in the last 10 years close to 2%. In the last 5 years, 1.7%. When we put everything together, analysts believe that they're going to be growing at about 7.6%. That will give us an average of about 6%. When we look at the multiple valuations, this is looking at the way that the market has valued Walmart in the past 5 years, and when it comes to revenue, earnings, free cash flow, book value, or their dividends, these are the numbers that you can see. And for those that are listening, I'll talk to you about it in a moment. But before, I want to make sure that you understand that I am not a financial advisor. Everything that I talk about here is for educational purposes. This is not a recommendation to buy, sell, or hold Walmart. So, based on the historical multiple valuations, what the market has been willing to pay for Walmart, it's somewhere around 130 to 142 dollars per share. That would be a fair price on today's numbers. When it comes to a payback time, if we were to hold Walmart for the next 15 years and just receive the free cash flow, growing it at 5.5%, that will give us a fair price somewhere around $118 to $140. When it comes to the discounted earnings valuation, if we take the earnings per share, grow them at 5% and 5.5% in the next 5 years, then receive a 30 PE, and then discounted back, it will be somewhere between $90 and $120. Earnings, owner's earnings, Buffett likes this type of valuation. The problem with this type of valuation for supermarkets is that they have great capital expenditures. So I don't know if I will be using this one, but for those that are curious, it will be somewhere around $80 to $90 per share. When we put everything together, I think that it will be fair to the fair numbers that it tells me is the average is the 5-year average is $126, and the trailing 12 months gives me a fair value of $135. I will probably disregard the other numbers, and I will just focus on the trailing 12 months because of the way that the company continues to grow. I do believe that Walmart will probably still have some headwinds coming up next year, but then after that, with the possibility of some rate cuts and a soft landing, if the recession is not super bad, I can see this company going up. At $135 fair value, that will put us somewhere close to the 52-week low. However, if you are hoping that something to get maybe like a 15% margin of safety, because you think that Walmart is a good company, which I think it is, but I think that there is better possibilities for growth. You will be looking at $115, which will be somewhere around the drop that they had close to last year in June. So with those are the information that I have. There's my thoughts. If you have any questions or any comments, please leave them down in the description, in the comment section. Thank you for your support. If you would like a copy of my my Excel sheet and you want to run your own numbers and your own projections, I'm gonna leave the link below, and you can get that. Thank you, and I'll see you next video.